Welcome to today's stock market news update. Let's start with the recent inflation data for the United States economy. Consumer prices in the US rose by 0.4% in August after seasonal adjustments, marking the largest monthly increase since January, according to the Labor Department. The jump exceeded economists' expectations of a 0.3% rise, based on a Dow Jones survey. On an annual basis, inflation came in at 2.9%, up from 2.7% in July. The core consumer price index, which excludes the more volatile food and energy categories, increased by 0.3% on the month and 3.1% compared to a year ago, both figures aligning with forecasts. Federal Reserve officials closely monitor the core measure as a better indicator of underlying inflation trends, with the central bank continuing to target a 2% inflation rate. These numbers, along with other recent reports, give central bankers the last key details they need before their two-day policy meeting ends on September 17th. Higher than expected, inflation could shape how the Federal Reserve views the economy, and they might add some pressure to decisions on interest rates. Shelter costs drove much of the monthly increase at 0.4%, making up about 1/3 of the index's total weight. Food prices climbed 0.5%, and energy prices rose 0.7%, with gasoline up 1.9%. Turning to US labor market data, the Labor Department reported that weekly jobless claims rose unexpectedly to 263,000 for the week ending September 6th after seasonal adjustments. That figure came in well above the forecasted 235,000 and represents an increase of 27,000 from the previous week's revised total. It marks the highest level of weekly unemployment filings in nearly 4 years. This rise in claims adds another layer to the economic picture that Federal Reserve leaders will consider at their upcoming meeting, and it could influence their thoughts on the job market's strength. Moving across the Atlantic to Europe, the European Central Bank decided to keep its key interest rates the same on Thursday, as worries about global economic shifts continue. The bank faces ongoing uncertainty, even though inflation in the Eurozone has stayed close to its 2% target in the last few months. Before the announcement, markets saw almost a 99% chance that the ECB would hold its main deposit rate at 2% for the second meeting in a row. The bank last lowered rates in June, pulling them down from last year's high of 4%. In its statement, the European Central Bank said that inflation now sits around the 2% target for the medium term, and its view on price trends has not changed much. Now let's look at the United Kingdom, where fresh economic figures show a pause in momentum. The UK's Office for National Statistics reported that the economy showed no growth at all in July, with gross domestic product coming in at 0.0%, matching what economists predicted. This comes after a 0.4% rise in June and signals a clear slowdown from earlier in the year. The flat performance will add challenges for Chancellor Rachel Reeves as she gets ready to outline spending plans for 2026 in the autumn budget on November 26th. The lack of expansion could raise questions about the UK economy's path forward and how it ties into broader market sentiments in Europe. That's all for today's video. Stay tuned for more updates and don't forget to subscribe.